Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Monday, November the 7th, 2011. Well, a continuation of the trend to the upside today. We have a candle that's made a higher high and a higher low. Previous day's trading was, in bar chart terms, an inside day, and today has continued the trend that was opened to the upside a few days ago. Green bodied candle denoting the buyers making net bullish progress as opposed to the sellers making bearish progress for the previous day's trading, and the buyers have managed to close this market with control, and they've shown some commitment throughout the trading day to close the market up towards the high. We can see the shadow on the bottom of this candle and on the bottom of the previous candle representing the sellers losing commitment throughout the trading day, and that corresponds with a test down below this area of support at 1246. So that's a very important area to this market, and one that should be watched over the next few trading days. Having said that, however, we do have resistance just up above where the market's trading at the moment of around this 1265 region, and that was a previous area of support and resistance, and now is holding in as resistance as a zone. So that's an important area for tomorrow's trading as well. If we do trade above there, we have resistance at 1275 and then a zone extending up to 1300, and 1300, the round number, has been a very strong level of resistance for this market previously. To the downside, below the 1246 support, we have support at 1332, and then at the top of the cloud, which is roughly 1223, and that support from the cloud extends all the way down to about 1170 or so. Now, in Ichimoku charts terms, the market is remaining bullish, and we had the bullish breakout a few weeks ago with a fairly bullish candle. The market tested up to around the 1300 level roughly, came off with two very strong red-bodied candles with solid downside momentum, but found support at the top of the cloud. We've bounced off there, and now we're finding difficulty trading up through 1265, so a bullish market in big picture terms. In the medium term time frame, the market is above the Kijun-sen, which is trading at 1183. It's obscured by this area of support with the line that we've got here, and that is flat, so we've seen price action attracted back towards there, so there is still a possibility that the price action will be attracted back towards the flat Kijun-sen. So we're bullish in the medium-term time frame, and also now bullish in the fast-term time frame by trading up above the Tenkan-sen. We've been trading up above there for a few days. We closed just at that level for previous days trading and back up above, so attempting to build some upside momentum, but we do have that strong resistance all the way up overhead extending to about 1300, so let's keep an eye on those levels over the next few trading days. Next, moving on to gold, and here we see a candle that continues the series of higher highs and higher lows. A fairly large green bodied candle, and that suggests that the buyers made net bullish progress on the day between the open and the close, in contrast to the previous day's trading where we had a red bodied candle, so a fairly bullish candle. However, having said that, we do have a shadow on the top, and we did see the buyers lose some commitment, and that coincided with the 1800 round number. So that's an important level for the market tomorrow when we begin trading. We will need to trade up through that level and test up to around this 1814 and beyond if we are going to trade back up to around this 1920 level or so. But good bullish momentum with the buyers in control, although they did lose some control late in the day. In Ichimoku charts terms, bullish in all three time frames. The market's trading above the cloud, above the Kijun-sen, the pink line, and above the Tenkan-sen, the green line. So bullishness all round. The Kijun-sen, the Tenkan-sen, the green line, is pointing up fairly sharply, reflecting good solid upside momentum that we've seen in this market. And if this market does come off, that will be the first place that we should see support, and that's at 1740. There is further support all the way through the cloud from roughly 1723, 24, extending down to around 1700, the round number. And we also have the Kijun-sen trading just below there, so good solid support all the way down through there. So a bullish market in all three time frames. Testing 1800 today, we'd like to see a test up above there with a bullish close up above that level in the 1814 if we are going to see high levels during the week. Moving on to light sweet crude oil, and a continuation of the trend to the upside with a candle that's made a higher high and a higher low, so a first time frame uptrend. A green bodied candle larger than the body on the previous day's trading. That candle had no body. It was a doji type candle and did offer potential for a change of trend, but we haven't seen the market confirm that change with a lower high and a lower low. We've continued to the upside with a higher high and a higher low. The size of the body, however, is very much in line with the size of the bodies from the previous 2 days before the doji type candle. So the buyers are continuing to make the same amount of net bullish progress, say, between the open and the close. So a consistent uptrend, except for the doji type candle that basically had no effect on the market following the previous day's trading. The market has closed up towards the high, not quite at the high, but towards the high, which means that the buyers have closed with control. The buyers did lose some commitment late in the trading day. We can see the small shadow on the top that coincided with that area of resistance that we highlighted previously at 96, and that has been an important level for this market, and it will be an important test for the market over the next few days if we can close above there. Above the 96 level, we don't have any solid resistance until the market trades up to around 100. So we could see the market appreciate fairly rapidly if we do see a bullish breakout up above that level. Obviously, the 100 level, round number, very important level, big psychological level, will potentially hold as very strong resistance to this market if we do trade up around there. To the downside, we have strong support at 92.57, which was the previous area, also coinciding roughly with where the Tenkan-sen is trading, and at 90, another round number, that has provided previous resistance and tested as support. So we could see that hold as support if we do trade down around there. Down below there, we do have very strong potential support all the way from the top of the cloud at about 88, extending down to the bottom of it at roughly about 83, with the Kijun-sen in the middle of that at about 85. So very strong support down below. In terms of the Ichimoku indicators, we are trading up above the cloud, so we're maintaining the bullishness that we've seen in this market by trading above the cloud. In big picture terms, we broke out some time ago with a bullish breakout, and the markets continued trending up in the second time frame as well as the first time frame. We are also trading up above the Kijun-sen, the pink line, so bullish in the medium term time frame and bullish in the fast term time frame by trading up above the Tenkan-sen, the green line. The Tenkan-sen, as with gold, is pointing up fairly sharply, so we do see that as a very important area of support if the market does come off. But we do have these shadows on the bottom of these previous three candles where we've seen the sellers lose commitment as they were trading down around these levels for the past 3 consecutive days, and even extending it out to perhaps 5 days. So for each of these days, the sellers have been losing commitment, so the buyers are really quite strong in this market at the moment. So obviously a test at 96 is going to be very important for a potential test up to the round number 100 over the next week or so.